Hello, good morning. Good morning, good morning. Hello, hello. Good morning. Hello, good morning. Good morning, good morning. Good morning, everyone. Good morning. I hope everybody's seeing me live. Good morning, Patrick. Good morning. Good morning, Daniel. Good morning, everyone. Good morning, good morning. Today is a special edition. Today it's gonna be special. Good morning. Good morning, guys. Those of you who are on Facebook. Good morning, YouTube guys. Good morning, my Instagram folks. Good morning. Good morning. Good morning. Click share, join and share. Join and share. Join and share this morning. Join and share. As you join, make sure you share. As you join, make sure you share. Today we are doing it's going to be great. I feel excited this morning. I feel very, very excited this morning. And it's going to be an excellent show this morning. Guys, it's going to be excellent this morning. Just join. We're live now. Join, and share. Join and share. Join and share. We are live this morning. Join and share. Join and share. Join and share. Join, share. Join, share. As you join, you make sure you share. As you join, you make sure you share. As you join, you make sure you share. We have a couple of more minutes and we're going to be going live. We have a couple more minutes and we're going to be going live. Join and share. Join and share, guys. Join and share, guys. Join and share. Join and share. Join and share. It's going to be crazy this morning. Join and share. Join and share. Join and share. Yes. I'm glad you guys are tuning in. I'm glad you guys are tuning in. Um, yes, join and share. I'm just updating one last thing and then we're going to go there. Join and share, guys. Join and share. Join and share. We have 2 more minutes and we'll be live. We'll all be talking. We have 2 more minutes. It's Saturday. Many people were asking me to come on Saturday, so I'm on Saturday. So join and share. Yes, one voice. My people join and share. So let me go back live on Instagram. Mm. Join and share. We are live everywhere. Yes. I see I'm doing it out from home today. Thank you. Thank you guys. Thank you. Thank you guys. Thank you. Join, share, join, share. And let's make it happen today. Um I don't know if this sun. I'm doing it from outside, right? The weather is good here in Houston, Texas. And I thought I'd just do it outside, sit outside and Let's make it happen. I would have liked to have some music so we can have some fun because today it's going to be a lot of fun. I'm really excited about today. Really excited. The topic is great. We are ready for you guys. So let's make it happen. We are in this country for a reason, and we need to make things happen. Guys. Good morning. Good morning. Good morning. Thumbs up if you see me. Thumbs up if you hear me. If you are getting any problems, just make your thumbs down. Guys, share. Guys, share. It's 10:30 and we are live on Instagram, we're live on Facebook, we're live on YouTube. Guys, join and share. Today we're talking about a very exciting topic and I'm excited to be here. And one of the things that's particular about today is that we're gonna have guys coming in from different angles. People are going to tune in. It's going to be a live session. People are going to share. We're going to be talking to one another. And then I want your live experiences. Post on YouTube, post on Instagram, post on Facebook. Just send questions. We are going to be answering your question. And if you want to share my screen, ask, send an invite, ask, and I'll accept you to come on and speak. This is how we want to make it. Saturday is Today is the most important Saturday of 2022. This is the last day of 2022 and we just want to be happy we're here. We're just happy we're here. And guys, let's make it happen. Five more 1 more minute. 1 more minute, and I'm going to be starting. Just share as you come on, you share. And if you're having any difficulties connecting on any of the platforms, just let us know. But we know all the platforms are live. We are on Facebook, we are on Instagram, and we are most importantly on YouTube. You guys should go like our page, follow us on these pages so that you are the first to be notified when our programs are coming up. Guys, we are here for you. We are sharing very, very valuable insights. We are sharing information that will make you wealthy. We are sharing those things that are privy to some people. We want to make it available to our own community. People must know how to make these things happen. The only reason we're here is because we are privy to be here. Let's take advantage of being here. So today, um, I give 1 more minute. Share, guys. This is Saturday. Happy New Year. Happy New Year to you guys. Happy New Year. Happy New Year, guys. Happy New Year. We are going to make it happen. And today, that topic is fire. Fire. We've been talking about tax planning for the last couple of months, for the last 3 months. We are at the end of the year and we're getting into the tax season starting Tuesday. Boxing Day, I don't know if the Boxing Day, after Monday, which is the second. Tomorrow is New Year. Very special day. Happy New Year to all of you out there. Happy New Year, guys. Happy New Year in advance. I hope all of us have had an excellent 2022. And we are getting into 2023 with lots of excitement. And some of these videos, some of this information is meant to make all of us really get ready for what we want to do. Guys, good morning. Come on in. Come on, share. As you join, you share. So today it is now 10:34 in the state of Texas, and I'm going to start. As usual, we always start with a word of prayer. Thank you, God, for today. Thank you for making us live on this show. Thank you for giving us life, oh Lord. Thank you for being there for us. Daddy, we come here this morning to glorify your name and to thank you, to open our minds and to get right into it. Daddy, everything that is ours, we're going to get it in Jesus' name. Amen. Okay, so today the topic is why millionaires, billionaires, why all these rich people pay no taxes. And then what we're saying is that you can do it too. You can do it today. You can do it too. And it's not privy to them. It's not privy to anybody. It is something that is out there for us to do. I mean, what I tell people is that the tax code is a set of rules that are really out there to help us, maybe to help us avoid taxes. It is out there to make us learn to optimize our positions and to take advantage of every situation in the market. It is that set of rules that the government uses to incentivize those areas where they want us to be involved in. We just need to know where they want us to be involved and we make it happen. So today we are going to explore the 5 top strategies that millionaires and billionaires leverage to pay to avoid paying taxes at all. I see a lot of disappointment when people say that billionaires do not pay taxes. Personally, I do not expect them to pay taxes. I really don't. Good morning. Thank you for making it to this very first edition of our Saturday morning webinars. Oh, yay. Yes, yes, yes. My name is Charles Njoya. I'm a CPA, I'm a tax strategist, and I'm a wealth coach. We are glad this morning to have heeded to your call. Turnout looks very impressive so far, but we can do better. Please like, share, continue to share, and invite people to these programs. The reason we're bringing it to Saturday is so that all of us can learn some of these things that we have, that are privy to some people, but are available to it's available to everybody. So we're just putting it out there so that we can take advantage of it. Please start by liking and sharing this video. We can so we can have a full audience today. Follow us on YouTube, on Instagram, and Facebook so that you are the first to be notified if our weekly videos. I'm especially delighted with the turnout as we head into this tax season, as we head into the new year, into 2023. We have some very exciting tips for you to make sure you are taking full advantage of the tax code. Um, I'll start by saying this. This is a quote from CNN Business News. It says, Elon Musk has a history of using the US tax code to pay little or no taxes. Okay? On little or no personal income taxes. A report from ProPublica shows that for 2028, Musk and many other Americans near the top of the world's richest people paid zero in taxes. In Musk's case, he receives no salary from Tesla. I want to emphasize on that thing of no salary from Tesla, only valuable stock options. That's what the article continues to say. As a form of compensation. So he receives no salary from Tesla, only valuable stock options as a form of compensation. Under the US tax code, he doesn't have to pay taxes on those options until he exercises them to buy shares of stock at a fraction of their current value. That's what I'm just quoting that from CNN, the business news. But let me correct something. I'll correct that article by saying that the mere exercise of options does not trigger any taxable event until the underlying stocks are sold. That is only when you get a taxable event. Musk understands that. He very well understands that and has been playing the game to perfection for many, many years. So we're going, so based on this article, since the creation of Tesla, Elon Musk, the richest person in the world, has hardly ever paid any taxes with all the billions for all these years. In this video, I'll explain how he did it and how you too can do it. There are two main types of income that we need to know. There are two main types of income, even though the rich have added a third, and we're going to talk about that third. The two main types of income are earned income, which is income from the work you do. It's income that's coming from you performing a service, doing something. Whatever you do, that is called, that you get wages. I don't know if the volume is coming out clear. I'm getting some sounds. I hope you guys are getting me 100%. Please just click if you're getting me 100%. Just say yes, because I'm getting some sound vibes in my, and the sun is coming directly at me. Today I'm doing it outside. I didn't realize the sun was coming. So, but that is okay. There are two main types of income. That's what you call the earned income, which is income that you get from the work you do. It's the form of salary, wages, self-employment income, businesses, whatever you do, you get earned income. It's earned because you work for it. Then there's something called an earned income. This is income from passive activity. Passive activity means you are investing. You've invested your money and the money is working for you. Dividends, interest income, income from the sale of stocks, limited partnerships, real estate investments. All those things are called unearned income. So you're sitting and your money is working for you. Those are all unearned income. And there's a reason I'm explaining these two types of income and as I go through this. Some billionaires and millionaires have added this third type of income, which is called cash flow. Cash flow is not really an income, but since the millionaires, the richer people, the rich people, they live off of it, that is considered to them, they consider it, that is their income, but it is not really a form of income. So earned income tax rates are ordinary income tax rates. So ordinary income tax rates are the higher tax rates. They go from 10% right up to 37% in the new tax code, Tax Cut and Jobs Act, the one that's applicable now. In the US, they go from 10% right up to 37%. So the higher income people, when you earn over 200,000, 150,000, 200,000, you get into that highest tax bracket where you're paying 37% of that income is going as taxes. Earned income tax rate are ordinary income tax rates. These are the higher income tax rates. Most investment income is taxed at what you call capital gains tax rates. These are lower tax rates and they go from 0, 15, and 20%. Those are the lower income tax rates. And you know what? Cash flow, which most billionaires live on, it's taxed at 0%. It's really taxed at 0%. And we'll talk about that. And this is not only, we'll talk about that. Now, let's look at Trump. We've talked about Elon Musk. Let's look at Trump, for example. I'm just taking a few of these people so we can get some examples. So the New York Times obtained Donald Trump taxes for extending over more than 2 decades. And these taxes revealed that they revealed struggling properties, a lot of write-offs, and audit battles. It said hundreds of millions in debt which were coming due. It goes further to say that Donald Trump paid $750 in federal income taxes in the year 2017, when he became in 2017. And then the next year, he paid another $750. It goes further. Listen to this. He had paid no income taxes at all in the 10 years, in 10 of the previous 15 years, largely because he was reporting much money than he made. Okay, this is what the news says. When Trump was asked this on Visio Mundo, what did he say? He said, that is because I am smart. Many people laughed. Many people disagreed with him. Many people were angry about that. But I agree to it 100%. And I'll tell you why as we proceed. In fact, I believe very strongly, and this is very strongly, that if you are a real estate professional, what we call rep, as I believe Donald Trump is, and you're operating at that level, you should not be paying any dime in taxes. I really strongly believe that. And I do that for my clients. For this reason, for the reasons we'll explain below. Warren Buffett, one of those billionaires as well, he says that he's quoted always as saying that he said that many times, that he pays less taxes than his secretary. Forbes website notes in 2021 that richest Americans, including Jeff Bezos, Elon Musk, Warren Buffett, and others, they paid income taxes equaling 3.4% of their $401 billion that they created in new wealth in that particular year. And I will tell you that most of this 3.4% came from one man. It came from a guy called Elon Musk. Because in 2021, Elon Musk decided, I say this with in all because he decided that he was going to pay taxes. He tweeted on text on Twitter and told us that, oh, maybe I should pay some taxes. People have been complaining. Maybe I should pay some taxes. And because he made a mammoth amount of wealth in 2021, because um he had exercised his options that he had been carrying forward since the creation of Tesla. He created these options. Those options were at the stock prices of Tesla in 2020, in 2012. So in 2021, those options were due for exercise, and they had multiplied many times in value. He decided, I'm going to take a little bit of this, and he sold 14. He exercised them and sold 14 billion worth of those options, of those stocks that had been exercised. And when you sell any of those investments, then what happens? You get what you call you trigger a taxable event, and because of that, he's paid $11 billion in taxes. And he's been touting us a lot of times on Twitter, saying he has paid more taxes than anybody. That year he paid 11 billion after he had not paid taxes for many years, and because he decided to exercise those options and sell some of them. So in 2021, with the options trading phenomenally higher than their 2022 prices, that's when he decided to do that. So why do these millionaires pay no taxes? And can I do it too? The answer is absolutely yes. Everybody can do the same. Um, and the reasons for that, I'm going to give you 5 of them right now. Number one is leverage. Number one is leverage. You do not pay taxes on debt. Rich people focus on growing assets. They invest in capital items. They can use that. They use that to leverage debt. So rather than take a salary in the form of or other forms of income that will be taxable, they rather grow their asset base. They grow their asset base, and this is available for everybody. You grow your asset base, which gives them unlimited access to other people's money. So they get access to debt. They get access to other people's money. They are growing their asset base. They are investing in their basis is growing. So for many years, Elon Musk did not take a dime in salary from Tesla. He accumulated share options, as we just said. He accumulated share options that he used to access debt. He used that to access other people's money. He went to the banks. He's worth this. He had all these options that had significant value. So you go to the banks, and then they are ready to give you against those options. So he just has cash flow. He gets cash flow, which to him becomes his income. He gets access to money through by leveraging those assets, and then he continues to live on those on the cash flow. That's number one. So you leverage debt, and then you live on them. You leverage, you live on them. So I want to tell you that everybody can do that. Everybody. You don't need to be a billionaire. You don't need to be a millionaire. There are 2 things that will give you access to other people's money in this country. There are 2 things. Number one is your ability to pay. Number one is your ability to pay. And ability is demonstrated on your tax returns. Your ability is demonstrated on tax returns. When you want to access other people's money, they want to see that you have the ability to pay. You're demonstrating that on your tax returns by preparing taxes, by showing that you have a certain level of income. You have the ability to pay. And when you go for those things, they will ask you 2 to 3 years of your tax returns. They want to see your track record, to see your ability to pay. The second thing that will give you access to other people's money is your willingness to pay. So you have that ability demonstrated through your tax returns, and then you want to show your willingness to pay through something you call your credit. In America, your history of your willingness to pay back debt is shown on what you know your credit. Your whole life, your living is shown on your credit. So your credit and your ability to pay through your tax returns, those two, if they are done right, they give you access to everything, to everything you need to grow wealth. And we can help you do that. We can guide you on doing that. Number two, these guys invest on long-term assets. Most rich people live on long-term. They invest and focus on growing the basis of their assets. Real estates, stocks, they do not sell them. They keep them for as long as possible. Hence, they don't create any taxable event when they keep those things. Most of the less richer people, what we do is that we live on a current. You're trying to make things happen. You invest, you're already selling. Every time you buy cryptos and you sell them, as soon as you sell them, there's a taxable event. But if you keep them for too long, first, you're going to have capital gains. Capital gains are paid at the lower income tax bracket. You can pay them at 0%. You can pay them at 15%, depending on how much you made. And you can pay them at 20%. Whereas, through the trading of all those items, you buy real estate, you're selling them, you're flipping houses. When you're flipping property very quickly, what you're doing, you're creating what you call taxable events every time. And that's why you're paying much in taxes. So as long as you focus on increasing the basis of an investment and do not sell or take out income, there is no taxable event. Yet you are growing in something you call wealth. You're building wealth. You're building your bottom line. You're building your basis. The focus here is on wealth growth, not on income generation, not on making cash, not on making money, not on bubbling. That is something we all can do. When we invest, I was listening to a guy they call him Mr. Wonderful, on a program called Shark Tank. I was listening to Mr. Wonderful just yesterday, and he had this video that came out. He said when his son, who is an architect or something, who is an engineer, he went for an internship. He went for an internship in Tesla. And the son came back to him and said, a few years ago, he came back and said, "Dad, why are you not investing in Tesla?" He said, "I want to kill the crap out of those guys. How can you be selling cars and then you're just bumping your stock price at crazy values? I want to kill them." His son told him that, "Hey, Dad, you know nothing about what Tesla is doing. Tesla doesn't sell cars. They sell data. They sell data for the future." He said, "So I didn't know that." He decided to invest a little bit of money in that portfolio from his private account. And then he left it there for a few years. By the time he went back to that stock, just to see what has happened, that stock had grown over 1,000%. That is what you call long-term investment. He puts the money there and then he doesn't look at it. We all can do that. Number three, there is something called cost segregation. Cost segregation is really for those who are in real estate. And most people, I say this time, if you are in real estate, or even if you're doing what they call Airbnb, if you are in any of these activities and you are able to demonstrate, my role is to help you qualify for what you call a rep by advising you to qualify for as a real estate professional. Once you qualify as a real estate professional, you can basically write off, you can use passive activity losses to write off ordinary income. So you can take all the huge losses, and I'll tell you how you accumulate those losses. You can take the losses that you're getting from real estate investments, and there are so many vehicles to accumulate those losses. Okay, so you take those losses And then you can write them against your W-2 wages. You can write them against your hotel revenues. In the case of Trump, the likes of Trump, who are in real estate operators, they can take advantage of something, this cost segregation, and they understand it. That is a big place where, in many years, these guys have accumulated millions of dollars of write-offs through cost segregation. So this is the biggest benefit in real estate. It allows you to recover costs a lot quicker on certain portions of the real estate activity. In most cases, rather than depreciate commercial real estate over 39 years or depreciate residential property over 27 and a half years, you are able to decompose elements of that property and then take them out, write them over 10 years, over 2 years, over 3 years. You can depreciate some of the cabinets a lot faster. You can break down some of the how do you call them? There's so many things that you have in this home. You have so you are allowed to accelerate depreciation by components. This leads to huge tax losses taken immediately and also carried back. You can carry them back 2 years, and you can carry those losses forward indefinitely until you use them all against your ordinary income. So for those of you who are high income earners, you make 300,000, 400, 500,000 in W-2 income. You don't know how to do that. You don't know how to write them off. You can use cost segregation if you qualify. My role as your wealth coach is to tell you how to qualify, help you qualify. And once you qualify, you pay no dime in those taxes. You're taking your passive activity income and writing off against those ordinary income, ordinary activities. Under normal circumstances, passive activity income, your investment losses, your passive activity losses can only be written off against your passive activity income. But because you qualify as a rep, you can take cost segregation for millions of dollars, for hundreds of thousands, depending on wherever you are, for tens of thousands, and write them against your W-2, your business. And you're paying zero in taxes. Let me have a minute just to get my, okay. You are allowed to accelerate. We've talked about that. So you can write off things like your washers, your dryers when you have a real estate property. For those of you, even when you're doing Airbnb or you buy a house, you're not flipping houses, you're in real estate, you can write off the washers, the dryers, the refrigerators, certain cabinets, etc. at faster rates. You can write them off at over 3 years, 4 years, 7 years, 10 years, rather than wait for the 27 and a half years on a straight line or 39 years for commercial properties. This could amount to millions of dollars that you can take immediately and use as write-off against future incomes, ordinary activity income. So most of these billionaires, they leverage that. They leverage net operating losses. This is called net operating losses. When you have net operating losses, you can actually take them backward 2 years and you can carry them forward indefinitely against ordinary activity. So when I say write them, carry them back 2 years, for those 2 years that you made some profit and you pay taxes to the IRS, you can actually go back and amend your tax returns to include those losses and then get back your money from the IRS. That's what the billionaires, that's what the millionaires, they leverage this. Another thing that these guys use, because they are investing in those things that are required. Remember, I've told you this so many times. I've told you that the tax law, the tax code, is a set of rules. It's really a policy tool for the decision makers. It is a policy tool for the government. It is a policy tool for whoever is in government. They use that to direct investments to where they want it to be. They use that to direct investments if they want you to invest in real estate, because the government cannot do these things. The government doesn't hire people. You and I do. We are those who are in the private sector. We are the entrepreneurs. We are the ones that do hire people. But the biggest statistics of the US government, what every government is watching on a daily basis, on a monthly basis, is the employment reports. Those employment reports, when they come, they're like, okay, we hired more people this month. Oh, there were less people this month. There's a whole fuse around that. Because the government is depending on the private sector, on you and I to hire people. So when you are doing something in that light, when you have a business that's hiring people, you are employing, putting people out, you are investing in those areas that the government wants you to invest in. What happens? They give you what they call incentives. And those incentives are through the tax code. So they use the tax code and give you incentives. When most of us were getting what you call stimulus money during the COVID, we were getting stimulus money for $600, $1,000, $700. Businesses were getting millions and millions of dollars of incentives because they are the people that keep this government. You have to understand that. We have to understand that. Another thing, number 4, is other bonus depreciations. We've talked about depreciation. Now we talk about other bonus depreciation. Bonus depreciations are accelerated depreciation that are given to anyone who is investing in a particular thing. There are things, if you're buying equipment, you can write them off immediately. You can actually take bonus depreciation at 100% on equipment that you bought for about $1 million. There is something called Section 179. Section 179 allows you to buy, if you bought anything within the threshold of $2.6 million, they allow you to write off up to $1 million immediately. So assume you qualified, and you qualified you are a business person, and you have incomes from other sources, and then you are investing in real estate or in any equipment, or you buy equipment for your business. You buy equipment because you're making a loss. You've made a big profit. You're working for, maybe you are an employee for Google or something, and you earned $1 million plus bonus within the year. And you're looking for ways of writing off that $1 million. How do I write off that $1 million? You have another activity. You have other businesses where you are not you are not a passive participant. You are the active participant in that business. That business, you can decide that for my business, I'm going to buy equipment for $1 million. I just made $1 million of income. I am going to buy equipment for $1 million. That equipment will qualify for Section 179. Means you can take accelerated depreciation or bonus depreciation immediately on all of that property. And then what does that do? You take that and then you write off your W-2 income, your W-2 wage. That is what billionaires, millionaires, they do. Another thing, number 5. These people, they make use of the best people. They make use of the best people. When you talk about the Jeff Bezoses, the Donald Trumps, you talk about Elon Musk, you talk about even many millionaires, Robert Kiyosaki, all these people. If you watch their videos, if you listen to them, they are always talking about their CPAs, the guy who is their tax strategist. They get the best tax strategies because tax is the biggest cost you have. Most people just believe that by having an accountant, you are a business, you have an accountant, that accountant is your tax strategist. No, he's not your tax strategist. Tax strategy is a completely different deal. You have to have a tax strategist, someone who understands it, and then there's a price for it. At times we are too cheap. At times we just don't do the right things. We are too cheap, penny wise, to do those right things. Hire the right people. Give them pay the right people, because, cost is related to value. It's related to value. So if you're looking for cheap, many a times you will end up turning around. Most people will tell you, oh, do not put your income there. Do not show your income. When you don't show your income, you're killing the biggest thing that will give you access to wealth. You're running after cash flow, some small cash flow. You're running after refunds. Yes, Refunds are great. We do. I mean, there is no person who gives more refunds to people than I do, because I know how to give you refunds. We know how to do that. But I will tell you that any client who comes to me, the first thing we talk about is, what are your intents? What is your intent? What do you want to achieve? What do you really want to achieve? Once you clarify to me, and then we get a plan. It's not about winning now. It's about building wealth. Wealth is not a short-term thing. It is not it is not immediately. You build wealth by accumulating some of those things that build wealth over time. If you don't know, if you don't understand how to do things over a 5-year period, over a 2-year period, over a 3 years period, you will never be wealthy. I can tell you that. Wealth has to do with long term. If you do anything on short term, your tax rates in the United States, just for state, just for federal, is going to be 37% tax bracket if you're a higher income earner. 37%. That is if you are a higher income earner, and then that is just for federal. And then if you are in a state where there are taxes, you add another 15% for state taxes. That is 37 plus 15%. That's more than 50%. Then in addition to that, if you're not structured properly, there is something that you call self-employment taxes. They're going to kill you. So guys, leverage the best people. That is one of the most important things. So they will hire these people who are higher income people, to hire the best people so that they can make more money. I'll tell you something. I had a client. I just started working with a client. I started working with a client. And when I looked at that client has been, a client who's been making, the turnover for that client is about 13 million. And then they don't have an accounting system. How do you have 13 million in revenue? You don't have an accounting system. How do you? And then secondly, they payroll through ADP. ADP, this company pays, and I can tell you that they pay a whooping about $500,000 in taxes on a quarterly basis. So they pay only taxes for employee taxes is about $550,000 on a monthly basis. The company has been paying that for years, and then they're using what do you call them? They're using a company called ADP, which is the number one in payroll. And then for some reason, they had this thing called ERC, Employee Retention Credit. This company completely did not even look at the ERC. They did not look at the ERC. And I took this client, when I looked at it, I said, you have paid for that quarter for the year 2020 and 2021. They paid over how much? They paid over $6 million, $7 million in in payroll, and only taxes alone were more than $2 million. So because we took that client, we reviewed that client, we made that client, we went and did the ER. Okay, let's proceed. Thank you guys. I am sorry. I am sitting at the backyard. I'm sitting in my porch at the backyard, and for some reason the sun decided this is the first day we're doing this out here. It teaches me a lesson. So for next time we're going to be better. So I see a lot. So let's. We are on. Let me go back to where we are. So I just told you about the five things to do. The 5 things you need to do. The last one we talked about was leveraging the best people. So they will hire the best CPAs. They will hire the best tax attorneys with expertise in tax strategy and wealth building. They are like your wealth coach. They will help them avoid taxes. Tax strategy is something that you do throughout the year. You don't just wait to do tax strategy at the end of the year. You do that throughout the year. So whatever you guys, if you have a business, you want to connect with your with the tax strategists and make sure that person is looking after your interests from day one. They start planning on how you avoid completely from paying taxes. You completely avoid paying taxes. Not just at the end of the year. All investments are supposed to be strategic. You have to know why you are investing in this. Why am I buying this? Why am I doing that? If you don't have confidence in your accountant, you don't have confidence, you feel that your CPA doesn't understand some of these things, because not all CPAs are tax strategists. 99% of CPAs are not tax strategists. Yes, all investments must be strategically designed to take full advantage of the tax code and to focus on building, on wealth building. You just don't navigate without seeing where you're going. When you have an accountant, you need to be seeing some statistics about your business on a monthly basis, so that in month one, you have reports coming to you from the CPA, from the accountant, from whoever it is, telling you that this is how much you generated this month. This is where you stand in your, these are your margins for this month. This is your net profit. This is your taxable income. This is your estimated tax. And if you could do this, if we invest in ABC, you will avoid these taxes. That is what a tax strategist does. So I just gave you 5 points. And what I'm going to tell you is the tax code, folks, it is out there for us to take advantage of. We need to leverage the rights people to make sure these things happen. It doesn't only happen for the rich. It just happens that the rich know how to play the game. Let's learn how to play the game. Let's learn how to optimize our tax position. Let's learn how to take advantage of the community in which we live. We are living in the largest capital market in the world, and we can take advantage of other people's money to make ourselves rich. Thank you so much. Let's look at some questions that are coming in. Was instructive enough? Please like our page. Follow our page. We are on Instagram. We are on YouTube. You will get the long videos on YouTube. We are on Facebook. You just go to YouTube, you type my name, Charles Njoya, or chn.advisors. You get into the page. There are tons and tons of materials for you to learn, for you to live. And on Instagram, we have these short reels, those short tips that we give on a constant basis. Guys, this is tax season. Let's make the best of these taxes. Let's not only start optimizing our taxes, but let's start doing something. Let's optimize our wealth position. Let's start building wealth. You build wealth from no position. If you are earning $30,000 a year, you are in the position to start building wealth. As long as you are able to use the services, to learn these things, you can go and learn them yourselves. That's why I'm giving all these materials out. We have to win. We don't have any option but to win. Thank you, guys. Do we have any questions? Yes, Emmanuel, can you post any questions that are coming on? I had some questions last week. I'm looking, let me go to my YouTube page and see what we have. And guys, if you learned something today, thumbs up. Go down and just give us a thumbs up. We are doing this thing. We want to grow our community. We want to make sure that our community is doing better. Thank you guys for watching. Thank you guys. I know we've been here for long, but I think we learned something today. I just want to thank you for being here. Let's see any questions that are coming through. And I said something to you guys. I told you guys that if you want to connect to us, or you had something that we can all share. This is a platform for sharing. That's why we changed our platform from Thursdays. Everybody was like, no, Thursdays don't work. We were only sending those information by Thursdays don't work. Please change it. Please, Thursdays don't work. And that's why we decided to change it from Thursdays to today. I hope that is giving value. I know it is giving value. I really know it is giving value. Please, thank you. Thank you. I see a question online. What question is that? He's saying, okay, I see that from George. George is asking, Charles, how can I contact you? Oh, great question. So to contact us, you can actually contact me directly on my cell phone. My cell phone number, I'm gonna give it here. It's 641-451-4467. Or you can go on our YouTube, on our any of our pages, and then you send your comment. You can go. You can also go to our website. It's chn.advisors, and then you drop a comment. You send us. You go to our website. You see all our numbers there. Somebody is asking, what is the tax code to do accelerated depreciation on private property and commercial property? Okay, private property. I don't know what you mean by private property, but let's talk about, there's something called commercial property, and there is something also called residential property. Private property, if it's something that you own and it's a personal property, you cannot take depreciation on. But but if it's a commercial property, once you make it and it becomes a business, an Airbnb, you make it, it becomes a business or a commercial property where you're on the main street and you're allowing its offices, its warehouses, and things like that. You can do. I told you about section one. I told you about the different sections. Section 179 when you acquire assets there. But the most important thing, you can do cost segregation. Cost segregation allows you, if you qualify, and that is something I tell you, my role is to make you qualify, to tell you what are the things you need to do to qualify. And we have a video where we talk about the qualification of being a real estate professional. So if you qualify, you may qualify just by being the one who provides, who does the management services. You don't, once you maybe have a management company that is taking care of your real estate property, you may not qualify. But if you are taking care of your own real estate property, maybe, and I see this all the time, people have properties, people who have huge properties, instead of creating a management company, which is another company, just to take care of those properties, you don't do that. That is something I see that people just don't take advantage. So if you're asking of the tax code, you can go to look for cost segregation. I don't know the exact code, but if you look at section 179, it will tell you about accelerated depreciation, and then there's something called bonus depreciation that you can take. But for cost segregation, for you to qualify, the first thing is that you have to qualify as a real estate professional. That way you can take passive activity and then passive activity losses and then write them off over your ordinary activity. Hope that answers the question. Yes. Thank you, Irv. I see you. I see you, lover of love. I see you, Njema. I see you, Patrick. I see you, Emma. I see all of you. I see you. Thank you all for being on here. I see you, Charles. Thank you. I appreciate you, sir. I see my mom. My mom is there. Thank you, mom, for being there. I thank all of you for being there. I see a good turnout. Please, I just want to tell you, happy new year. We've had an excellent 2022. When I say excellent, it doesn't mean we haven't had issues. We've had issues, but we are alive. And we have the opportunity to build. We have the opportunity to do greater things. And we are here to make them happen. If you don't know, you want to join my team. If you join my team, we are going to win. We cannot come to this country and pass by. We must win. Again, you can join me anytime. Go out there and please enjoy yourselves in moderation. Thank you, and you have an excellent rest of your day. Before you know, we have an excellent team of people that we work with. I have lawyers. I have I have financial advisors, and next week I'm going to have with me one of my great friends. We work together. He's a financial advisor, and he helps a lot. He's called Steve. He owns one of these big big star shops. He's the owner of I'm not going to go about it, but he's been in this profession for more than 30 years. He owns an Edward Jones location facility. You guys know what Edward Jones do. You know their history. This is a guy I work with on anything that has to do with personal wealth, personal, like deferred benefits, 401ks, Roth IRAs, HRAs, HSAs, all those things. I work together with him. So he will come and tell us how you can defer, how you can build generational wealth for your kids, for your generations by using those facilities. Thank you, and have an excellent rest of your day. Bye bye. Bye bye. Bye bye. Did you attend? How was it? Emma, how was it? How was it? Yes. Okay. The images came out okay. Okay. It is shady. Okay. So the message. So next time we'll not do outside because outside will have all these shades. I can do it from not from the home. I can do it in the office, and then if I do it at home, I have all the lights that are there anyway. So we have a constant picture. Yes. So we have a constant picture. What was the message well delivered? Okay. You're not saying that because I'm the boss, right? So it tells me you were there for 50%. It tells me that you, you were there for 50%. Okay, let me ask you this. What I want to know, did you think people learned a lot? I saw a lot of people engaging and selling thanks. Blah, 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 blah. I saw a lot of people, but the sun was preventing me from seeing all of the things. Mhm. So, yeah. Yeah, I'll try to read them at the end. That's what I was doing at the end. I saw one person said, I saw some comments, but the last one, I just saw the last one who was asking about private property, what do you call commercial property or something like that. Yeah, but I think that, but you think it's, so it's worth it, right? It's I wrote some, but I get to speak off the top of my head. So you want me to write more? Yes, because I write them, but I always go out of all the topics. So I should stick to what I've written. Yeah, yeah, I see that. But I can share what I wrote with you so that you use it to, and I'll give it. Yeah. For all, I'll take the thing. I'll take all my scripts and just put them in the folder. That way, it's easier for you when you cut something and you know exactly what to write on it. You can just copy what I wrote and then make it as and make it as the subject, or not the subject matter, but the description. Okay. Okay. Do you so I would like to see the video. The video was very crazy, right? Because of the sun. Okay. Hmm. So in terms of the sound, did I shout too much or was the sound okay? Okay. 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 The most important thing for me is for people to see the passion. Because when you have passion, they know that you're passionate about what you do. I'm not just reading. They know that I know what I'm talking about. Yeah. People can see through that you know. If you're just reading, people can know that you're just reading something. I don't want to be the same as somebody who's just reading something. Yeah, because I came late. I came late. No, I could not because I don't have any support. That those are the type of things that if once I start doing it, when Flo comes back, she'll be the one doing those type of things at the background. Hmm. I used to have Lisa doing all those type of things. She's looking at it, but when I'm doing it alone, I can't. I'm the one doing all of these things. So now, yeah, I think I should be. We should. I think I'm proud of what we did anyway. So that's fine. Yeah. Mm. That community talk, we need to make a lot of marketing on that one. Let's do the first community talk. When do you want it sooner or later? You like you? It seems as if you're very interested in community talk. So what do you want to? I don't even know what we talk about. If you want to do it next week, what do we talk? Yeah, and community talk is really going to be an interactive thing. And I want to look for somebody. I'll just look for one of friend who is kind of a popular guy who people know, and I'll involve him in it. Yes. And that is where it becomes very interesting, right? That's where it becomes very interesting.
and they feel like they have a better opinion or and not a contrary opinion, they want to come on and give their opinion. Even us, like even some of us, the team members, can come up and give our own opinions regards to certain the conversation that is going on. We can also
and,
like
and, and
give
people will share more if
creative
they
views.
and people will share more if they are contributing. They want people to see them contributing.
Yes, yes. When I go on the live video, when I even post some of
I
my
will bring this guy. You know, there's a guy I have down here. Have you know Dr. Santos? He's a psychologist.
no, I'm not
Okay,
sure. I don't know.
Santos is a very popular guy. I'll bring Santos on for that. Let's look for a topic, and then I'll tell Santos that Santos, you have to come on my show. He'll be very happy because he's very glad to. He's very popular. People will say all sorts of things with him, but I just want him to be there because he's a psychiatrist. He's a doctor. He was recently honored by the United States. He was given the Lifetime Achievement Award by Biden. So he's not a nobody.
Yes.
Yeah.
And then we can even in the Cameroonian community, we can look at people that
Yes.
are already doing
No,
well
let me
in
tell you
their
something. If
fields.
we are doing the community talk, right? The community talk will have, maybe we will have, we can have two people. I can even bring Bea. You know Bea Leonard.
Um, I'm not sure.
Okay, you don't know him. Okay, he's somebody who is also very popular out there. He used to work at FM Soundsing. He's no longer there. He's now doing his stuff. But let's just do this. It's not about other people. It's about us, right?
Yes, yes.
It's not
So
about.
this is us trying to grow them and bring people interested in what we're doing. So like I said, I'm going to write, like I'm going to think of a few ideas that we can begin with. And if it's possible, we can you can do two lives per week, maybe on Thursday and then Saturday, Thursday, Saturday, I don't know, or maybe Saturday and so I don't know because since you said you don't have much time to be creating a lot of videos. So because if we are doing the community talk, we cannot just do community talk, we have to do community talk and then of course do our regular taxation and wealth videos.
Okay.
So I don't know
So
how we can
community
do
talk, let's do it. Let's give it. Let's get prepared, and then we see. Send me the things that you wanna
yes.
send. Let's talk about it.
Okay, I'm gonna do that today before the
Yeah,
end of today.
yeah. I personally, I think that today's video had a lot of good content. The only problem that I think was the sunlight, and going forward, we'll not do it outside again. We'll just do it inside the house, in my office, because there's lighting in the office, and then the background will be stable. This one makes the background not stable. People are struggling to see you and stuff like that.
Yes, yes.
Mhm.
So
Okay. Okay, thank you. You have all the things. The platform, I don't know what I've done. I've just ended the video, so you take it from here.
yeah, yeah, we'll take it from there.
Okay, bye bye.
Okay, thank you very much.
Appreciate it.
Happy New Year.
You too. Same to you. Hmm. Arsenal.